coming with this recording session today also. One thing that you would be seeing today that we are short one partner. Bhargavi is not here in India. I think that is something that we wanted to update in the last episode as well. Vinod, do you think this is the right time to do that update?
Yeah. You'll see Bhargavi, from the US, in the upcoming episodes with fancy pictures, backgrounds. Hopefully, yeah, we should see her. I think she just landed in the US, and in a week's time, she should be on the next freewheeling. Yeah, hopefully. You just put Karthik, Java's expanded into the US market, or put an American flag, if you ask me, and that is what will be interesting. Yeah, and Bhargavi sees it at least.
Right. I think I am not too nimble today. Sadly, but I am trying to do that as we speak. But I think from an operational point of view, we will not see any change. It should be a minimal impact, at least for the outward looking. So if we are engaging, if you're a founder and you're engaging with Bhargavi, you should not necessarily see a lot of hurdles in terms of reaching out to her, because she will be available during India time as well. And we'll keep bothering her at night. In fact, she's a night owl, so she prefers working at night and late in the night. So we'll give her a week of honeymoon period, let her adjust to the jet lag, and then we'll start bothering her in the evenings.
No, absolutely. I think interesting for us. I'll tell you what's interesting for us. Because we have one more person in a different market, and also it's a very capital rich space. And our intention is not to go and invest in the US market. Bhargavi will stay in the US. Help raise and build a larger network, both for our fund and also for our startups. Given that we have like nearly 30% of our companies as SaaS companies, and we already have a bunch of companies incorporated in Delaware and Singapore and SaaS companies, which is largely an India to the globe kind of stories. This only makes it Java Capital stronger going ahead, especially whenever there's a India US corridor need, and also exploring GTM opportunities for our portfolio companies in the US market, right? That becomes like a straight interesting strength for Java Capital. This was in the pipeline for some time. It is just that could have happened last year possibly, but it eventually happened this year. We are all super excited, to be working, with one Bhargavi in the US. I think we should call ourselves a global venture capital firm now, yeah?
We should. I think you're absolutely right, Vinod. We have been thinking about how to engage the significant base in the US who is interested in Indian startup ecosystem, right? And I think Bhargavi relocating there is a part of this plan, where we can actually leverage some of our networks there, activate them, and through our own very little way, help the cross-border pollination of ideas, and help them take a look at some of the companies that are happening in India, and vice versa, right? I hope this will be a fruitful sort of an engagement for us, by two of us being here in India and Bhargavi being in the US. And then we'll give you an update from time to time on how this experiment is coming up. Or coming along, right? I think for a venture capital firm, we do quite a few experiments, don't we?
Yeah, I mean, Java itself, the beginning of Java itself has been an experiment, and I think we are pretty open in that way, on how we evolve as a firm, Karthik. And I think this is another step in that direction. And for all I mean, some of these steps, could become leaps, and these experiments could become something long-term, perpetual,
yeah,
for us. And maybe, US, we'd probably be one of the fewer funds now with the Indo-US corridor opportunity in the pre-seed, seed stage space, right? So founders listening in, right, this is a game changer, especially if you're looking at, global markets, and, we have building our strength and network out in the US also, and that makes us stronger. Like a lot of other venture capital firms, have a couple of partners in the US and a couple of them in India. If you take a lot of the firms today, right, in India, all of them are pretty much in that model, Karthik. Be it like Axel, Nexus, and all that. And I think in a way, it's not like something path-breaking, but it's an established model. But for a pre-seed, seed stage fund, I think it is probably a first of a kind.
Yeah,
in a way.
yeah. So we are very excited for this phase of Java Capital. I hope you will also, give us the support as we try to figure this out, and hopefully, we'll see some good things coming out of this little change, right? But for all intents and purposes, the goal is to ensure that you guys don't see any change in terms of engaging with Java Capital. All the systems will be running behind the scenes as is. So yeah, with this announcement, let's just start this week's Freewheeling Friday. What do you say, Vinod?
Excited. Yes. Hail, Uncle Sam also now.
All right. Yeah, I think we should a shout out to Janet Yellen as well as Nirmala Sitharaman. Right. All right. So let's start with the first topic of the day. Vinod, I think this it's the CAC conundrum of D2C brands, right? Obviously, last 2 years, we've seen a lot of D2C brands come up. They've raised a lot of funding, and we've seen some staggering numbers in terms of revenue. And we thought that the CAC, the D2C brand story is here to stay, right? But of late, we've seen somewhat concerning, disconcerting sort of news come out of the D2C space, wherein companies getting acquired for less than ideal sort of valuations, right? Is it necessarily the story of the CAC problem which the brands are unable to solve, or is this something more, or is this just a side effect of the market that we are living in right now, right? I think the example that I wanted to give is that of Bewakoof, right? Apparently they have 250 crores in revenue, which is significant and sizable by any stretch of imagination, right? The disconcerting part is that the brand is getting acquired for about 100 crores by Aditya Birla Group. So what do we have to read into that?
I think we should just go back a little in time to understand this D2C conundrum and see if that helps answering this question. I think in the early days, when I say the early days, I'm talking about between say 2016 up to 16, 17 also, I would say, right? D2C brands were always valued lesser than tech companies, and this was an ongoing thing for a long time, almost like between 2010 and 2016, 17. And then there was a massive turn and saying, D2C brands also can grow faster and they can become massive companies, and their valuations almost were matching tech company valuations.
Yeah.
Even though it was partly driven by, the story that, you can directly go now to the consumer, you can eliminate the distributor. But I think a lot of people didn't fit in one piece, right? D2C involved in between either Facebook or Google.
Right.
which eats up nearly 30 to 40% of all funding that goes to D2C companies, right? And instead of a retailer margin, you had a Facebook, Google margin coming into play. I think the measured excitement, or I should say exuberance rather, of D2C brands, and that's where we ended up with the valuations that we had, and also we had dedicated D2C funds. Shooting up valuations, consumption economy is growing, and COVID also added to that flavor, frankly speaking, right? COVID was a massive impetus for D2C, because if you're sitting at home, you can't go to a retailer, what would you do? Simple answer was you're looking at, all sorts of brands and buying them. And I think, that phase is mellowing down now, and, and people have realized, what the unit economics is for D2C. And I think that's where the numbers are coming down, Karthik. No more comparable to tech. If you ask me, we are going back to our old thinking when VCs used to say, oh, you're not a tech company, you're a brand, right? I can't value at the tech valuation. For some time, you had tech valuations. Now, we are going back Is my view to the, maybe that was the right thing.
So essentially, you're saying that the VCs who ended up funding D2C brands indirectly funded Facebook and Google, and
So D2C brands, and even if you fund any consumer internet company, right? That's been the case, I think, right? In a way, because you have to spend to acquire users.
correct.
D2C is a part of consumer story. Even a consumer internet company ends up spending a lot of money. A lot of VC money goes. I mean, there are some reports, which says, nearly 30 to 40% of all VC funding goes to Google and Facebook,
Right.
which
right.
is the case.
Which is the sad reality of,
Sad
of-
reality,
of the market right now.
Yeah.
But I think, that aside, right, it's not, I think it's still prudent to get excited about the D2C space, because we've seen brands like Boat come up, or Mama Earth. These are some of the companies which are actually doing really, really well, right? But I do understand that Boat is in a different category altogether. It's consumer electronics versus pure consumer facing brands in competitive spaces like snacks or food or some of these other categories, right, which may not be as attractive. It's would it be fair to say that there are some categories which lend themselves better to this kind of or have the appetite to actually soak up a lot more VC money and can actually produce better results for the investors and for themselves?
I think now I have a slightly pretty much a contrarian view now, given the turn of the events right now. I think we didn't know much about how D2C brands operate in the country. We only knew how the traditional route operated.
Yeah.
Now we know. Now I think people would value companies accordingly. I mean, even a Boat, right, was supposed to have a massive IPO that was filed for, but eventually raised a convertible at a much lower valuation.
Yeah.
Which is indication of both market sentiment and also understanding of the economics of D2C business in the country now. If we've all understood that economics, then we know what the numbers are. There is no more. I mean, should I use the word hype? Is what I was thinking. There is no more a bubbled up valuation for D2C companies. Looks like everybody has to prove economics and continue to grow. How many unicorns do we have in D2C today, right? We know that, right? Like a couple of them, so maybe Boat and Mama to an extent, and Nykaa. But Nykaa is not even
It's
just
more of a
D2C,
platform.
It's more
Yeah.
platform market,
Yeah.
basically. So I think the challenges are very clear, or maybe the answers are out there for venture capital firms, and I think we also have invested in some
In a couple of brands. Yeah.
And the lessons are actually from us also, and for us also in a way. So
I think it's also important to clarify why certain VCs invest in these brands, right? Some VCs, they build a thesis on this entire D2C space rather than hoping that each of those companies are going to be unicorns in their own right? Which means that you have some 20 odd companies in your portfolio, and all 20 of them will do maybe a 3x or a 4x. It still does make sense.
So that makes sense, but you can't then do a tech valuation. I
Correct.
think now
Yeah.
it has to be much more unit economics driven, demand driven, and how much is the consumption that's possible.
Very much so. I think the last year and a half, we've seen some of these tech valuations blowing over onto the D2C as well. It's like a rising tide, lifting everybody up, right? And it's bringing it down. And I think D2C brands are actually facing a lot more of a headwind than the tech brands or SaaS companies, mainly because it's the universe of the people, VCs or investors investing into the D2C brands has always been fewer compared to tech, right?
And expect consolidation, like Bewakoof acquired by tomorrow. They say they're acquiring a bunch of brands, and everybody is building a house of brands, right? That means they are looking for economies of scale even within D2C, to try and achieve that. So if everybody is building a house of brands, then you expect consolidation. So I think D2C will go through a massive consolidation play with the likes of the Tatas, the Birlas, acquiring a lot of these and consolidating within their consumer and divisions.
Right.
Frankly.
So given all of these things, right, is Java still investing in D2C brands?
Yeah, I think we've not staying out, but I think we've been really looking for something that will work for us in terms of economics. It's not like we're just jumping in and getting into.
Yeah.
Frankly, a little bit more cautious than in the past, especially on valuations and expectations on D2C brands. Next week when Bhargavi comes, we'll have to see how is her views, given that she has a lot more take on
Experience
D2C,
in this space.
Yeah, in this space, yeah. But I think we've been cautious. We've not come across also great stories of late.
Correct.
In D2C space, right? So that means the ones which are going to come up should be very interesting and exciting, and a large market opportunity. So
Right,
I think
right.
D2C is in a slight.
So it's
down phase.
it's in the on the way down, at least for now.
For now, yeah.
For the time being, and we're going to be seeing a lot more of these consolidation happening in these brands.
Absolutely.
Right. And speaking of consolidation, Vinod, I think this is something that we're seeing in another space as well, right? We've just seen PhonePay's news about PhonePay, trying to acquire
Yeah.
Zest Money, and then what was the other acquisition with the credit acquiring
Credit
Credit
acquiring
Vidya.
credit with, yeah.
So are these like one-off things? Are we seeing a fintech space consolidation?
Yeah, this is a massive fintech space consolidation. I think this is going to play out over the next year, and we should see a lot more consolidation.
But why though? Fintech has been the darling of the startup VC investors in the last few years.
That's
right?
true, but have they all been able to get to some kind of an economics that's workable? If you look at PhonePay, I think their economics seems to be like at least some workable. They're generating revenues, and they have a good amount of cash sitting on their balance sheets.
Yeah.
Credit also the same case, right? They've raised enough money, and a lot of money is sitting on the balance sheet, which is even if it's on the liabilities side, but it's sitting on the balance sheet, right?
Correct.
So whoever has a lot of cash is going to acquire a lot of companies in this space. Currently, in my view, in the fintech space, there's the pay you, the process, big, large possibility. And then you have, I think previously we spoke about the build desk acquisition falling through, right?
Correct.
For whatever reasons, right?
Yeah.
That was exactly because, it's available for consolidation at a lower price is a general assumption now. So same thing, I think, is what has happened in both these cases where, either the companies couldn't grow fast enough or there was not enough capital. So they had to find a way to, stay alive. And I think consolidation, is an exercise now, frankly speaking. And I expect a lot more companies, especially in the fintech space. There's only 3, I think, which are very visibly large players now. PhonePay, Cred, and, the PayU group.
Okay. What about Paytm?
Paytm, for various reasons, right? It's valued right now at $3 billion.
I know. I think there's a lot of speculations, given that it's a public company now, which has put some dampener on the valuation. But all indications from their revenue point of view, they seem to be doing fairly well. They're picking up.
Bulk of it is coming from lending.
From lending,
So
yeah.
all the businesses that they have,
Correct.
which is like a lot of
But
them.
this was something that we discussed long back, right? All the fintech companies
Lending.
are going to converge into lending.
So actually, why is Cred acquiring Credit Vidya? I think, we don't know the inside story.
Yeah.
But looking at it from what was Credit Vidya doing, right, in the space, Credit Vidya was trying to do alternate credit scoring and then on top of it, building a lendable model, and they were lending also through NBFCs, maybe on their books also.
Correct.
So what would Cred do now? Cred had P2P already through liquid loans. Now, with this, they may actually get seriously into lending. Lending as a feature is really going to come true live. There were already some lending happening on Cred, right, in different form factors. Now maybe it starts happening in a very straightforward manner, possibly.
But let's also talk about that a little bit more, Vinod. If you look at Credit Vidya, right, I think the whole premise there is, look, I will be able to evaluate your credit worthiness, not based on, the traditional
scores.
factors, but, with all the other surrounding information, right? But if you look at Cred as a platform, it's predominantly for the top 5%, 10% of the population who already have an established credit, right? So is this a way for Cred to expand beyond the 10% that they have been looking at since their beginning?
Looking at the app and way it's designed, right? I don't think so. It's usable by the rest of them. You know, it's like still that 1-2% credit card using
Holders. Yeah.
audience. I think if they have to expand, they'll have to figure the app. You know, it's too jazzy for like, you know, it's not a Bharat kind of a lending app yet. Maybe they'll have to do a new one or something like that. But I don't think so. They're going there. I mean, why would you want to go there? You know, when bulk of your lending is here, maybe they'll go about it a little later, not anytime soon, is my view. Again, look, all of this audience disclaimer. You know, I don't have any insider view. Just we are making. You know, as
whatever
good
public sources of information we have, we're trying to
guesses and
extrapolate.
whatever we've read. Yeah, just a disclaimer so that you know, nobody comes after. You know, yeah, I think my guess is they'll just stick to it, Karthik. So there's enough capital that can be lent to this credit card profile user itself, because they know how much I am borrowing because of my bills that I pay, right?
Correct.
So they have enough data and even credit with I've had, especially of the 1% users.
Right.
My guess is they will use the credit models and the technology of Credit Vidya and start underwriting for a different audience.
Interesting.
Which is more a tech IP acquisition, less so a lending book or that's my view again, you know, for why Credit would have acquired Credit Vidya. Yeah, not for the book at least. The book could have been small is my guess again.
Right, right. Yeah. I think that makes sense. I just thought, you know, maybe they're trying to figure out, you know, how do we monetize that, you know, we've raised so much money and, you know, maybe they're expanding their user base and hence, you know, this Credit Vidya thing falls.
The B2B thing, right? Technique is, you know, the supply side, if you look at it, right, is the cred signed up user. But the demand side is not the cred user, right? It's being given to some people who really credit, either on the cred possibility, most on the credit users, but that can be expanded through other sources. You know, the money could potentially be expanded, especially in the P2P case. Maybe liquid loans has other possible options to expand. But so far, I think it's mostly been within that ecosystem. You know, with Kunal Shah talking about that high trust network, right? That's the only thing. You know, maybe they'll put those points to some use. Yeah.
Yeah. So the bottom line is, you know, we're expecting more fintech companies to get acquired by some of these larger guys.
Absolutely.
I think what will be more interesting is to see if, just as what we are seeing in the D2C brands, where the existing, you know, big names, right, are coming and acquiring. I think we'll also see a little bit of that from, you know, the Reliances of the world, the Tatas of the world, into this, right? So that's going to be the underlying story for the next year and a half or so.
So fintech boom is coming to a meltdown consolidation phase, and whoever is in the survivors make a money.
Yeah. All right. So let's just give an update on the Climafix summit that you were part of last week, Vinod. So what was that like? And give us some
actually pretty
insight into this.
You know, I was actually surprised by the startups that you could have so many startups really, you know, working on climate. That was my first surprise. Also, the problems that they were tackling, right, was, width of the problems and, you know, how solutions are getting made. I mean, I keep asking myself, you know, is climate is another hype cycle like we've seen last year's crypto and the previous year's edtech, right?
Yeah.
I keep asking that question to myself, but it's hard to answer yet. But looking at the amount of action that's happening, right? I would be surprised if it turns out just to be a hype cycle. But if anybody from a long-term perspective, like how we've looked at, you know, deep tech or SaaS, right? And if we think, I think that way climate can be a really long-term, I feel, Karthik. Even though I have this lingering question, and we are doing our work, and surprisingly, right, in the last 2 weeks, there have been multiple VC firms who put out market maps out there, you know, putting out their theses. I mean, including, you know, Stellaris, Lightspeed, and everybody, is trying to just get onto this bandwagon as we speak.
Correct.
I mean, including us, I'm not saying we are any different here. I think we're just being very honest. Everybody, I think, is trying to jump on this. This reminds me of the Web3 jumping
The
days
craze,
also, right? We stayed
yeah.
away pretty much
Yeah,
in a way
yeah.
till the end, we didn't really get onto any of the waves. But climate looks like, everybody is jumping, I'm seeing reports left, right and center, people establishing themselves as thought leaders in the climate space, wanting to attract startups, which is again good in a way, but will the cycle live up to its hype is what every question, right? Like the crypto cycle, we would still, wait and see again. There are believers who still think, it'll work. Similarly, the edtech cycle, we've had a massive consolidation again, right? There also, just few people. So will climate go through a similar cycle this year, next year, and then, we kick back again, does it go back to the Climate Perkins kind of a story between 2001 and 8, or does it, become like the Indian e-commerce story, which continues to survive?
Yeah,
even after a
I think
decade.
there is one key difference between the Web 3.0 craze, if you will, and the climate tech excitement that investors have right now, which is the tailwinds that are coming from the government also, right? This is a clearly approved sort of an area from a government point of view. You don't have any regulatory hurdles that you need to jump through, and I think that makes it all the more different, something that can actually really stick.
So if we analyze that way, Karthik, right? I'll tell you one other interesting fact about climate compared to Web3, right? The Web3 and crypto world existed in the virtual world. It's all bits, right? I mean, you can't touch and feel.
Yeah.
Climate, right, is literally about atoms. Everything is touch and feel. Every problem that's getting solved, right, has an impact on air, water, industries. It's such a physical space, if you ask me. If we have to look at it, right, let's say the entire industries got revolutionized and became digital, let's say in the last 70, 80 years, after the computers became like, pretty much available for everyone. Think of it as a reverse now. Anything that is existing today, right, will have to address for climate. What became digital has to become, climate sustainable now.
Yeah.
This mic, this TV, this phone, the roads, industries, everything, right, literally has to become, because everybody is going to attack, every nuance of the problem, just like digitization, made everything digital, right? Today, everything is digital, right? You don't expect like the 60s, 70s world of the physical world, right? Everything was physical, right? And mechanical actuators.
Correct.
No, everything digital. So I think that way, right, climate is rooted in use cases. Unlike crypto, climate is touch and feel. It's about building things really in the physical world, which again, in a way means that, it can't be like a bubble easily. It cannot be an easy bubble. Unlike a crypto bubble or an edtech bubble, which see, edtech also, right, if you notice, unfortunately, everybody was saying, oh, let's go online, and kids will start learning online, and that was the cycle, right? Again, climate cannot be that. So between the two cycles, which is the edtech cycle and the crypto cycle of the last year, the climate cycle seems to be much more sure-footed on a firm ground. And I think that's I'm leaning towards that as we speak now. Yeah.
It may prove more enduring.
May prove more enduring, and it's a cause again still worth pursuing, I think, in the larger good, right?
Yeah.
I mean, was there a larger good in crypto? It seemed much more, leaning towards individual, decentralized
it was
philosophies.
More esoteric, it's you need to be of a certain intellectual capability for you to even understand what actually is happening. That way, it was not very inclusive, if you will, right? It's an oxymoron. It was supposed to be decentralized and more democratic.
Calling it as effective altruism is like possibly the hype of that or the height of that. I think climate is in some sense really altruism. Not just for the sake of it.
Correct.
I think there is a larger society good involved in every company which is trying to strive.
I think this is like a nice overlap of impact investing and financial investing, like real rewards. So the more we talk about it, the more we get excited about this space.
Yeah.
But what's happening here on this picture, Vinod?
Oh no, I've just captained and moderated a session, and introduced all these companies as they came on stage and presented themselves.
Very nice.
And also gave a view on greenhouse gas management, which is actually like an overarching umbrella topic, MBA management.
Yeah,
In a way, how do you manage? How do you measure?
Right.
What do you measure? And after you measure, how do you iterate, execute, go back and report on them? That's largely GHG management. So I just all these companies were in that GHG space, and were pretty exciting to talk to all of them. I'm like, the energy levels of all these companies were unbelievable for the 2-3 hours that I spent with all these companies. I think more we should do about this. Thanks and shout out to Narasimhan at IIT Madras. And also EAI, and so the sponsors of this event, right? I think it was a fantastic event they pulled off. Obviously, more such events brings more awareness, and where we are headed in the next decade. Climate's a decade, 2-decade kind of game before it gets normalized, saying everything is sustainable.
Yeah. No, I think that's fantastic, man. I hope you also got to hear from some other panelists as well on what they are seeing.
Yes, some of them were pretty exciting,
Yeah.
but I could hear, on the second day, yes. Unfortunately, a few, but I just, exciting companies for sure.
All right. So, Vinod, there's just one more topic on my list that we wanted to discuss this week, which is the CBDC, right? Now we just talked a little bit about Web3 and crypto. So why not talk about government-sanctioned crypto, right? So is it finally here and now? It's gone live in 4 cities, including Bangalore, with 4 of the largest banks in the country.
Yeah.
But the first question to ask really is, right, how is CBDC different from UPI? They both are digital, in nature, right?
No, I think they both are digital in nature. UPI is, clearly linked to your bank account in a way, but this is sitting at some level, on a blockchain, but still distributed by the banks, but it's still sitting in some level at a blockchain. And also the claim of, at least so far, whatever I've been able to gather, is that it can be used like cash, which is very interesting, right? So UPI at least leaves trails in your bank, where you've used, is it like a coconut shop wala, wherever that, right? So cash has always been the fastest and anonymous way of a transaction, right? A UPI is not still fastest and anonymous compared to actual cash today also. So can this CBDC, up to certain limits, can it remain, anonymous and also fast? I think the fast that we're talking, right, is where I think, I think there won't be a big change between UPI and CBDC, but anonymous could be something, a very interesting feature, which at least, people want it, and, and how does that work? Like, you transfer it to a wallet, just like crypto wallets, right? You transfer a certain sum to a CBDC wallet, and all transactions happen from there, and it just, you start spending as though you're spending it from your physical wallet. So, you don't know where it was spent, right? It will just.
But how is it possible? There is a trace on the blockchain, right? That's the whole point of putting it on blockchain.
I think the trace will be, I'm hoping, the trace is up to the wallet level and not inside the wallet level. Maybe inside the wallet level is just kept private to you. Just like in your wallet, you pick up a 10 rupee note and pay the tender coconut guy. It's only you and the tender coconut guy know, and the tender coconut guy still doesn't know how much you had in money. Only you know, right? And the bank doesn't know how much you used, right? I think that is a very interesting concept if they have implemented this really well on the wallet. And since the transaction is not getting reported back to the bank, Karthik, you know what it means? Your device is holding the currency, just like the physical wallet.
Because there's no middleman there.
Yeah, I'm not dependent on the bank. You don't need an internet connection, technically speaking, because money is there, right? In the wallet. I've already put money in the wallet. It's my money, and I can spend it however I want, in a way, right? Like in the cash. So I don't need like See, wallet is the only thing which is on the blockchain in a way. So the reporting, I'm sure they're going to figure out, how that works. Maybe it only transfers a blockchain.
But what is one interesting thing is you don't earn any interest on the digital.
Yeah, keep cash in your
Right,
pocket, you won't
it's
earn.
like
You keep cash in your pocket, you don't earn. I
Yeah,
think it's the same way.
right,
I think, I don't know about digital currencies globally. If anybody's tried this, I don't know about the China experiment. They did an experiment.
Yeah.
This seems to be an interesting experiment to replace cash.
No, but Chinese did.
Chinese did, but what was the features of that
That
currency?
is not very clear.
Very
Yeah,
clear,
but
right?
they did.
They
Yeah.
did. So this, at least the talk about this is actually very, very exciting. No, imagine you don't need to even carry a phone, for example. Maybe all of us carry a ring or something like that. That's your wallet. You just do something and walk away, right? Money is in some like a hardware wallet is what I'm imagining. I'm starting to imagine it like a hardware wallet, or maybe a chip, or your iPhone, all that, right? Imagine all that. You just load money and a ring or something like that. You don't need a phone also, frankly speaking. So,
But what does this mean, like, for the scamsters of the world? Is it easier for them to hide money now with this?
no, but you can't hide beyond the limit, right? So there is a PAN card reporting requirements if you do cash transactions over 50,000, right? The same thing applies here. I mean, people can't hide. But I'll tell you where the
What is the equivalent of stashing cash in your mattress in the case of CBDC?
you can't stash because it's traceable. The block of transfer from wallet to wallet, right? You transfer it. At least that will be traceable. You see, imagine what can be like the demonetization 2.0, if you ask me.
Correct. That's where I was going, right?
Yeah.
I'm just imagining, like, you take these land dealings
Yeah, just
and
say
you enforce that it has to happen only in CBDC.
over. End of story.
Yeah.
So if you say that that's about it, right? Actually, how do you remove the paper money out of the market in the long run? I think that's a massive goal. If somebody has put a vision for CBDC, right? It is the ability to take paper out of the system. Paper money today not only costs money to print, right? Like, and it gets damaged, and all those other issues that come with paper money, you need to keep reprinting.
It's not inexpensive to
So I'll tell
manage
you
paper money.
another interesting fact, right? I haven't seen a 2,000 rupee note for quite some time now.
Yeah, me neither.
Me neither. You're neither, right?
Yeah.
So where are all the 2,000 rupee notes, right? We are back to questioning,
Exactly, the logic of the whole demonetization.
Yeah. So maybe the demonetization 1.0, if it was not crazily successful, I mean, you can see the weaknesses in the system.
Correct. It was well intended, but it was not very effective.
Very effective for whatever reasons, the weaknesses in the system, right? But now you have a lot more digital possibilities.
Yeah.
Today, I went to Chennai recently, right? Almost every transaction I could do through, UPI, auto drivers, restaurants, flower vendors. So I'm just giving, digital penetration is not anymore restricted to Bangalore, right? Or even if you go to any of the smaller towns, right? UPI is pretty much. And funny case, we saw somebody was accepting tips in a courtroom, with the Paytm QR code, like the judge asked it to leave. So I think the digital revolution is truly in. How far can we go is the only question, right? And look, people who have enough money, right, they can't say that they don't have access to digital medium.
Correct.
For example, a land dealing or, any of these transactions, right? You take cash out of it saying, this is the only way you could transfer.
Yeah.
Maybe that is the only way it happens. But cash is always outside the system. So you squeeze cash as much as possible. And slowly everything starts going towards the
I heard
better
somewhere, I don't know how, the source is not very, I'm not very sure of, but maybe this. Almost 90% of the money in circulation is digital in India, apparently. Does that sound legit to you? Only 10% is actually really there in cash, but 90% is somehow tied in the digital way, like either UPI or your bank accounts or wallets and stuff like that.
Maybe, but I think there are certain kind of transactions and certain volume of transactions possibly that's happening in cash, which might be much higher than. See, I think in terms of number of transactions, right? I think digital probably would have or crossed higher. But in terms of size or volume of transaction, maybe cash somewhere is still playing a massive
Significant
role somewhere, like as you said, in those untraced transactions.
Yeah.
Yeah, maybe if, this will be come to some point, demonetization 2.0. I hope people don't, get afraid, but this might be an easier one, right?
Very much so.
So unlike, since we have so much of technology in play now compared to 2016, Karthik. Yeah.
So, the one final topic is more good news coming from the space startups of India, right?
Oh, absolutely, yes.
Yeah.
So we had a PSLV launch, which launched two of the startup
Pixel and
Dhruva.
Dhruva Space.
Dhruva Space. That's like absolutely good news. I think at least the space sector, is on a tear, which is great to hear. And again, adding to that, our portfolio company Agnikul is the first startup which has got a space inside Sri Lanka and set up their launch pad on their own. And hopefully, we should hear about a launch soon enough, right?
Yeah.
From Agni. I think that's super exciting. I'm hoping to be there. Let's see how that turns out. Let's see.
This is significant, right? I mean, it's not just you're creating the rocket and then using the existing infrastructure, but you're actually building it from the scratch. Of course, with the under the aegis of ISRO, with significant support from ISRO, right? But I think that should not minimize the extent of the achievement here by this young startup.
Absolutely, yes, right. I think we just are seeing a massive wave on this side, right? And nobody would have believed this was possible in 2016, 17. First time when I just spoke about it in an article recently, right? Like, there's so fantastic founders, who would want to do 2 MSs in the US and then switch from there to India. I think the passion of the founders of Agnikul is so visible, would take a bet any day kind of a thing, right? So, and if you look at our bet also, right, on Agni, we knew them for a long time, and then when we started Java, we decided to invest, without blinking an eye, which is again a real bet on the founders and their ability that they have massive long-term view on how they wanted to take it to the world.
But does this mean that the floodgates of funding are going to be wide open for space tech startups in India?
So early stages seems to be somewhat sorted, but growth stages still seem to be stuttering along. That's the article on the entrepreneur was focusing on. We I think are sorted on capital for like up till, let's say, Series A. There is enough people willing to take bets and enough people willing to take risks from the VC world. Growth capital is something still missing. How do you get the next 50 million, 100 million, right? Is the key. And also for a company like, say, Agni or anything like Karthik, imagine, right, if they do 2 launches, it's successful. After that, you start, doing commercial launches, right? Why do you need money also? Example, I'm saying, in this case, right?
Yeah.
It's a very commercially viable business model straight away after a couple of launches, right? You just need those. It's not like even a consumer startup where, you keep on pumping money, acquiring users, right? Like,
correct.
Actually hardware, once it starts, proving market worthy and flight worthy in this case, I think we are on to, generating revenues, which I think is what Agnikul aim for over the next year. And we'll get into a revenue cycle hopefully and soon enough, and then we may not require the kind of money, given that this industry, the demand is like 1,000%. There are not enough launch vehicles to take the satellites in orbit. So it's a great space to be from a commercial standpoint also. You don't need to really need money, especially for Agni after a point in time. Right. So we are in for some good times, but there are other tech startups which need a lot more research, and deep technology companies. That money, Series B kind of money will be required. If you ask me. Yeah.
So this is the entrepreneur
this is the
article that you are talking about.
We're talking about, where me and Srinath have given our views on largely, policy support and, about why we invested in Agnikul and how the government has been super helpful, especially on the space side. Uh, that's where this article kind of has come through. Yeah.
Yeah. So what we will try to do is we'll put up these the links to these articles that we have referred to in this session on in the description on YouTube, so you guys can also click on them and then check it out. Right.
So Karthik, now we've given them so much of gyan about startups, consolidation in fintech and D2C, then space tech, doing really good overall, massive support from the government. Take it away and say, what is this going to look like in a year from now? And then we can talk about some light-hearted topics, which we always do. What are you reading? What are you eating? Where are you eating?
No, I think, Vinod, look, the excitement is still there in the startup ecosystem. It goes without saying, because we're seeing a lot of these companies, even that we are evaluating, right? In terms of the deep tech innovation that is happening in this country is just staggering. We have only skimmed the surface of that, so we're going to be seeing a lot more of those things. I know the consumer internet is a little bit slow right now. I've been talking to you guys also, asking where the consumer internet companies are. I really hope they'll come back with a bang. The macroeconomic conditions obviously have an impact on these startups, but as and when the economy recovers, which we are hoping in the next year and a half or so, that should happen. We'll see more consumer internet companies coming as well. That will remain the story, because the India consumption story is still in the very beginning stages, right? We're still just a $3 trillion economy. By the end of 2030, we are going to be the third largest economy, somewhere around $7 or $8 trillion of economy. And a lot of it is going to be driven by the consumer class of India, right? While exports will play some part, none of the most optimistic reports put at the most $1 trillion in exports by 2030, so which means that you're still going to be a consumption-driven economy, which is good for the country in a way as well, right? Because that shields you from the external shocks as well. So those are some areas that I'm actually hoping will do fairly well in the medium to long term.
But there's one concerning thing, Karthik. I know I want to talk something light, but there's one concerning aspect that I'm starting to notice. Been traveling a bit, talking to a lot of people. There is this, view that if you made enough money, or if you see that you can go out of the country and settle. Yes. That seems to be another interesting aspect. The flight of
the millionaires, if you will.
Yeah, the flight of millionaires seems to be like a very concerning thing. I mean, it should be concerning to the government, more frankly speaking, right?
Correct.
So there are enough tax bases, jurisdictions available. People are relocating and investing from there to India. There is no doubt opportunities in India, but the investment not necessarily comes from in India, right? And it comes from the outside. Then you lose out on
the
returns in India, and so there are all these things. I think government should take a note and see how, again, as always, we are calling out to the ministry. I think they should look at it and make it much more conducive, bring parity on unlisted, listed stocks, make it easier to take money out and bring money in. And at some level, right, an election year coming up soon enough in the next couple of years.
Yeah, I think 6 months more we will be in the election season.
Election season. Yeah. Well, the upcoming budget will be an election budget, because the next budget won't give you any window. The 2023 budget will be an election budget already. Yeah. So let's see how that gets addressed, or the government will lean more towards the welfare positioning, or on encouraging entrepreneurship and on the likes.
A little bit more populist.
Yeah. So we'll have to wait and see. Doesn't change things dramatically, but it is starting to be concerning, if you ask me.
Yeah.
That's where ending on that note. What's the fun
I think you're right. One of the leading indicators will be the manufacturing has actually slowed down this past quarter.
Yeah.
I think we need to ensure that we don't miss the bus this time at least.
Yeah.
A rare opportunity has opened up for the country, and we should hop on the bus this time around.
Yeah. So yeah, what's the fun thing that's happening, Karthik? I can tell.
I think you should tell. More fun things are happening in your life than mine at the moment.
No, I think there's not too much fun, but I've been traveling, that's for sure. And wherever I get a chance, that I try to eat or go to a place which is of some significance to the city, especially some place. I think when I went to Chennai recently, I went to Ratna Cafe. I think that was a nice place. Shout out to Sundar who took me there. And then I've been listening to Ponniyin Selvan. I continue to try and finish that.
The audiobook.
Yeah, the audiobook. That's like probably one of my first audiobooks now. I think it's going through an interesting journey. And yeah, I'm looking forward to more travel. That's for work largely. The fun bit is, frankly, yeah, it's just been going to and eating at some places, Karthik.
Nice.
That's
nice.
about it. And,
yeah, couldn't complain with that, Vinod.
Yeah.
Yeah, we're looking forward to December actually. I think it's going to be a little bit slower for all of us this month.
Yes.
And I think we should all take a little bit of a break, recover, recoup,
And come back.
and come back banging, right?
Jan, yeah.
Right. All right. So most
Just
likely we
one
might.
shout out again. We have a newsletter web form on the website. If you want to sign up and you want to receive regular updates,
Should I put that up?
Java Capital, yeah. Do sign up there, and you should expect our first newsletter in the first week of December if you sign up for now. And yeah.
Where do I go now? For the.
Okay, Karthik's trying to pull that up.
Yeah, I have it.
Yeah.
Where is the sign up screen? Okay, yeah,
there
got
it is.
Yeah. So here we go. Let me.
So if we've been trying to launch a newsletter for some time now, and finally, I think we'll be out this.
Yeah, and we
this month. Yes.
aptly named it Brewings at Java.
Java, yeah.
So, so a lot of
share
thoughts
the
are
screen
brewing.
now, yeah.
A lot of new ideas are brewing.
I think you should put up the screen now.
Oh yeah. I thought I was actually sharing it. My bad.
Yeah,
Sorry.
there you
So just go to javacapital.co and then you will see this section at the bottom. Just give your email and the name, and then we will ensure that you receive our newsletter, right?
Yeah. Look forward to the first edition in a couple of days. Yeah. See you guys. Have a good weekend.
All right. Have a great weekend, guys. I'm not sure if we will do this next week. We'll have to play it by the ear.
Yeah, depends on so many insurers and so many other people. Yeah.
I think we should leave you guys with that thought. All right. Take care.